It seems that as life moves faster and faster, so do our expectations of the companies we rely on. With the importance of life insurance, we're excited to talk about innovating at the speed of life today from both that distributor and carrier point of view. I'm thankful to be joined today by Raju, Kevin, Fred, and Todd. Raju, we're going to start with you. Now, you've had the opportunity to design and execute multiple transformation programs with established companies. So how do you get them to move with the speed of a fintech or a startup?
Thank you, Sean. That's a great question. Yes, I've been lucky enough to have built platforms across multiple regions, UK, Europe, and now in the US. The theme is always the same, whether it's 20 years back in 2000 or in 2021, the business wants everything yesterday from a technology person. So that hasn't changed, and technology has come a long way in terms of making things easier, quicker. You talk about cloud, DevOps, lean agile principles, Scrum models, and things like that. The fundamental to speed is business reimagination, your approach to digital mindset, digital transformation. That is the core principles which helps us to do faster. And with our experience, we have been able to assemble good teams in LGA. And we built the digital platform in 20 weeks with a machine-assisted automated rules engine, underwriting rules engine, and a digital journey. We were able to launch it in May 2019, test and learn. So the lean agile principle is something we've embraced for the past 15, 20 years in LGA. And we always say, take it to the market as quickly as possible, test it with our customers, take their feedback, refine it, and deliver quickly. So we make every 2 weeks releases. And it also helps from the global CEO to say that we are a 186-year-old legacy company who knows how to do technology well, but we want to pivot away to say we should be a tech company who knows how to do insurance well. So there is a huge amount of investment in technology in LGA, which has also helped us to build all the enablers and the all the required toolkit and everything needed to deliver at speed. We deliver every 2 weeks releases, and we deliver at pace.
Do you have any examples of something that's come out in a recent release that kind of illustrates that speed and the reaction to the market?
Yes. So digital transformation and digital mindset is all about self-service, allowing the stakeholder, the user, to be in control by providing fine-grained information and keeping them informed, well informed. I use a Uber model as the implementation we do. In that, if you look at taxi hailing, pre-Uber and post-Uber, you can see the massive difference. We used to call somebody, wait for the taxi to arrive. Today, you do 2 clicks, and the platform gives you control to monitor, understand, and be comfortable with the entire process. That's what we are building in the insurance as well. And we have done well. One of the challenges, digital transformation drives culture change. And sometimes one of the complaints I get from the external agents is that it's all changing too fast and too quickly. And so communication and engagement has been one of our challenges. But some of our partners have been very, very good in understanding and appreciating. So as soon as we complete the solution, we do a playback, we engage them early, and then we do a show and tell, and then quickly implement it with communication. So communication has been a problem, but it's a mixed reaction. Some of them really admire what we do and want it quickly. And so they're embracing it, and they're able to change quickly and change the way they use it. But others do struggle, and we have that flexibility to adapt to 2 different communities and accordingly meet their needs.
That's fantastic, Raju. And then just that concept of a public-facing change coming out essentially every other week. That's a pretty steep pace. And Kevin, I know over at Policy Genius, probably that explanation of some of those challenges around quickly moving, communicating well, and taking care of your customers when things are chugging along at that pace. How do you deal with those rapidly evolving expectations and processes?
Yeah, great question, Sean. So I think for us, it's all around, to your point, the customer experience. And I think where we tie in nicely with what Raju was saying is taking bite-sized chunks very quickly, but in small increments around the customer journey. Like, where do they want to shop? How do they want to shop? How are they thinking about price? How are they thinking about coverage? How are they thinking about life events? And how does it all come together? And then we work to design our technology, our process, and also the people that we employ and where we insert them into the process. And I think we're similar to Raju's shop in that we're releasing every 2 weeks similarly, and we are taking bite-sized chunks every 2 weeks out of those problems and consistently iterating. It's not uncommon for technology that we deploy in 1 year to then subsequently a year later be very different because the customer is thinking about something different. The customer is thinking about how they shop differently, things like that. So it's all around the customer journey, really keeping that top of mind, and that's the ultimate focus, and then building everything around it within the company.
So again, moving at that pace, kind of anchoring everything off of that customer need and their journey. What do you look for in a partner in that environment?
I think the big thing is flexibility. And it's really important for carriers, distributors, tech vendors, whoever you're working with, to be as flexible as possible, because every distributor is going to probably do it a little bit differently. They're going to approach their customer, depending on what that customer demographic looks like, slightly differently. They're going to want to control different parts of the process. And life insurance it's a long, arduous process. So we look for our carrier partners to be as flexible as possible, give us kind of a menu of options, and then we can pull and push on the information and the requirements wherever they are. And then on top of that, build quickly, to Raju's point earlier, because again, if we are trying to change quickly and the carriers aren't changing with us, it sometimes will cause friction for the consumer that's really hard to overcome. And then nobody wins in that regard. So I think it's all around flexibility, speed to change, and listening to one another. I think, Raju, you laid that out really clearly and nicely, to listening to each other to understand where's the expertise coming from, why are the changes required, and then again, going back to that initial point I made, like being flexible around those changes.
Have you seen the pace of expectation across the past 18 months or so increase, kind of stay the same, or decrease? We've all been dealing with a lot.
I think it's definitely increased. I think I can only speak for our company. We're really excited to see some of the changes that have been made throughout the pandemic by insurers. I think there's a balancing act though there as well. While we've moved to digital and a lot of folks have become a little bit more accustomed to the digital side, there's still folks out there that need to be fully underwritten. They need that medical exam. They need to get the APS, and you're putting a lot of onus on providers that are already getting, because of the pandemic and everything about it, getting hammered pretty good. So I think it's going to be a constant balance, but we are seeing a really good green shoots in terms of the changes that are being made. But we just need to make sure that we're being mindful of every customer and how they need to be served, and their life insurance journey.
Thanks, Kevin. I appreciate sharing that kind of more recent experience also in the acceleration. I think we felt it on our side as well from a carrier point of view. And Fred, that's going to lead me straight to you. Recent changes and experience, what are you seeing that's driving innovation in the underwriting world?
Yeah, in terms of innovation, what's fueling it right now are really three different things, at least in our world. One is a proliferation of raw data sources, both from the medical aspect, whether it's prescription drugs or labs or diagnosis codes, or behavioral things like driver's records or public records and so on. Then second source is, there's a number of organizations now trying to use those raw data sources and different combinations of them to come up with risk scores that map directly into mortality. And then thirdly, there's machine learning algorithms. We have our own data science team internally, and we're developing a lot of algorithms that are going to help us improve the automation of our underwriting rules. So those are the three main sources of innovation right now for us.
Fred, you just said the word automation. I think someone throws out AU and it could stand for a couple different things. Can you walk us through kind of the concept between automation and accelerated underwriting and some differences there?
Yes, absolutely. It's very, very important for the audience to understand the difference between the two. They sound the same, they have the same acronym. On the surface, they replace paper, they reduce cycle time, but ultimately you get very different outcomes in the underwriting. And what I mean by that is you can end up with a very different price, a very different face amount offered, or a very different experience in terms of what's declined or not. On the automated side, which is the approach that LNG has used, or LGA, one simple way to think about it is it's machine assisted underwriting. So automated can result in instant decision making, but accelerated cannot deal with complex underwriting, whereas automated can, because when you do machine assisted, you can first figure out all the ones that you can do instant decisions, issue those right away. But where the applicant's risk profile gets very complicated with a lot of comorbidities, the machine is smart enough to realize, oh, I can't handle this. I'm going to pass it over to a real human underwriter with a lot of expertise that can handle that and make sure that they do the best possible to actually issue a policy rather than decline it. On the accelerated side, it's not possible to do that. It's completely machine. Typically because you're asking a lot fewer underwriting questions, a lot fewer underwriting rules at play. You have a higher risk. There's a higher risk of non-disclosure. Because of that, the actuaries have to use more conservative mortality tables, and that leads to a higher price. And also because you can't deal with the complex cases, you end up with a higher decline rate as well. So those are some of the key differences between the two approaches.
So Fred, I hear some, buzzwords, but some, interesting takes on things, right? We have automated versus accelerated, machine learning, credit scoring, very algorithms. You start putting it all together. It sounds great, but is it driving any change? Are we seeing results from any of that?
Yeah, absolutely. I mean, for us, at least over the last few months, we've demonstrated, if you just look at all of our numbers objectively, since the beginning of this year, that we made substantial progress. So for example, we've tripled our instant decision and approval rates since the beginning of the year. We've cut in half the number of cases where exams are required. Now we have a 90% plus placement rate on standard or better rating classes, 70% placement rate or better on face amounts that are higher than $500,000. We've also doubled our accelerated underwriting face amount from 1 million to 2 million. And this has all happened over the last few months, working in collaboration with Raju's team, between actuarial underwriting and the IT side to get all this done. So there's a lot more coming. This is just the beginning, and we're building a lot of momentum. Now that the base platform is really there, we're very excited about how our distributors are kind of moving to that platform, and it's creating a lot of momentum going forward.
I appreciate that, Fred. And with this recording happening in the back half of October, it'll be interesting to see where those trends continue to take those phenomenal results. Thanks for sharing all that. I appreciate it. Thinking of Fred's work, a little bit of what Kevin talked about, anchoring off of the customer experience, it all sounds kind of good in how it works, and maybe some performance here and what it sounds like. But I want to bring in Todd from the Marcus Agency. The innovation is fantastic, but you have real world clients, you have real world agency. What's going on with you? What are you seeing and experiencing?
Yeah, we've been somewhat late to this game, quite honestly. We kind of went kicking and screaming because our mix of business is primarily, I'd say, 75% impaired risk. And we've always shied away from the automated system, the instant issues, primarily because our cases do take a lot of time. There's a lot of involvement with APSs and exams, obviously, and multiple APSs. So when we were approached with the Horizon system from Banner, we tested it out a couple of years ago when it first started, and quickly realized this is just not going to be a platform for us right now. So when we got back in probably about 65, 75 days ago, we looked at the system again, and we saw a lot of changes that were taking place. And we also saw that the changes were taking place on a regular basis, as you alluded to. Every couple of weeks, a new gyration of something happening within the system was taking place. So we were intrigued. So we had some really good discussions about how can we implement a system like this on the impaired risk side as well as the healthy side, because we still do get some preferred pluses here and there. And we realized there were many benefits. And when we put Banner's Horizon system against the other systems that are out there, we realized that this is the system that we're gonna test out here, and it's worked out tremendously well. There are a few reasons that separates this from the competitors that we've seen so far. Number one, we have access to lab results right away when an exam is done. No other company is giving us access right online where we can pull it. We're able to retrieve the applications, the APSs. So we basically are fulfilling our file internally as you guys are going through that process of obtaining these critical items during the underwriting process. The other thing which we've realized through the automation that you've created is this: we have had instant issue cases where we traditionally would be sending you a paper application. So it saved us a lot of resources internally and time and energy, and obviously cost, to get these cases from submit to approved and placed much faster through that system as well. So far it's been an exciting process for us.
So my guess is a couple of those instant decisions came through as a surprise almost. How have y'all had to adapt to maybe things moving faster than you've experienced in that past?
Yeah, and I think a lot of it's psychological. I mean, the reality is I've been at this for 33 years, so we haven't had situations where we get an application to place the case within 24 to 48 hours before, quite honestly. The agent has to adjust to that as well and set the expectations on the client side. Typically, an agent's setting the client up for a 30 to 60 day process before we're going to have an answer. So when we go through this, there's a learning curve for us internally here as well, which is happening very, very quickly. So there's a couple of things that we're conveying to our field out there. That number one, if you do truly have somebody on the surface that is a healthy individual, absolutely push it through the system. You're likely going to get yourself a very fast decision. So it's about setting the expectations, not just for the agents, but also for the clients, and psychologically having the clients understand that, hey, you might be getting your credit card tapped within 48 hours here to actually accept this policy. I think it's important for consumers to understand that just because it's fast, it's still a very good product and a very good policy in which they're purchasing, as opposed to the traditional idea of going through a 60, 90, 120 day process of underwriting for life insurance.
That's great. Thank you. I think adjusting expectations all across with that every other week potential change in process experience and such, that's a great call out, and I appreciate you sharing that experience.
Sure.
So we're at the point where we get to the one sentence lightning round for everybody. So I'd love kind of your single piece of advice. What do you wish you knew a little bit earlier on your innovation journeys? Fred, we're going to start out with you on this one.
Yeah, I think it's really easy to underestimate the amount of resources needed for change management. So if I had to go back several years, and I would definitely devote more time up front to plan ahead for change management resources and make that part of the business case, and make sure that that's being handled, because it's really easy to kind of focus on the technology and the business and the underwriting and actuarial and forget about the human aspect. And it is a big part of implementing innovation and making sure that we're bringing everybody along. So I really encourage everyone to think about change management up front.
That's great. Thank you. Raju, how about you?
I think Fred nailed it on the head in terms of the challenge, for sure. I think if I can take a couple of minutes also, I don't know whether you noticed, I was smiling when Todd was speaking a lot. Because between Todd and Kevin, they presented two different challenges to us as a team. And Todd's experience, narrating of his experience, is a good example of the pivot we made to address both spectrum, to speak, of the need to make the platform very configurable. We always had API for Kevin and the flexibility to connect and do all of that. I think Todd is correct in that in 2020 we engaged, and we got a lot of feedback from Todd and team, and we reacted very quickly, and we changed the platform and refined the platform, which meant that we have both Kevin and Todd on the platform, which is fantastic. And I think that the reason I highlighted that particular issue is as a person coming from outside geography, that is something I did not appreciate, the complex stakeholders and the life insurance marketplace in the US, how diverse it is and how complex it is, and because of which we had to pivot a bit in how our architecture and design was done. And thankfully, modern technology world allows us to do that seamlessly. So we did that. So that is one. And the boring thing, other one is pandemic. My God, that put a huge roadblock for us, an impediment for us in last year, and we had to overcome that. So if I had known that, I think it would have been helpful.
Thank you, Raju. Kevin, how about you? What do you wish you would have known?
So I think what Fred had said really hit the nail on the head, but from a multi-carrier distribution platform, we are juggling all of our carrier partners and all the innovation that they're doing. And it used to be, I think before the pandemic, it was kind of a steady Eddie, one carrier change every one subsequent period. Now you've got 6 that you've got to juggle. There's just not enough technology and engineering resources, it feels like, to throw at it. So now it becomes prioritization, and a lot of iteration and how to, work within those confines. And I think to that point is, if we had known the roadmap a year and a half ago was going to go this direction, I probably would have staffed the team a little bit differently. But hindsight's 2020, so we're working as hard as we can to keep up.
Thank you. Todd, wrap us up. What do you wish you would have known?
I wish I would have known was going into this, if we were truly going to have known that there was going to be a collaborative nature to this relationship. And also, and I'll touch on that in a second, but also knowing how agile the company has become with the folks who are running the company at this point, from soup to nuts with the IT side especially. We would have jumped in sooner. The most important part for us right now is that going through this process and learning the systems is that there are items from our side of the fence that are so necessary on a daily basis that we're so accustomed to on more traditional stuff, that now that we're seeing what we don't have on the automated side, you guys are listening to us and you're making these changes on the fly. So that's the agile part that I've not seen before with companies, and we've obviously been doing this a long time and have had many companies in our stable for a long time. So it's if I would have known that we'd have this collaboration that's going on right now, and you're listening. Carriers often listen, but they don't actually implement. You're implementing, and that's the biggest change and advantage for us at this point.
Todd, I appreciate that. And I think it plays well with the concept. We're starting with the client in the middle, trying to figure out what the journey needs to be. No two clients are likely the same. So if they need to listen, try something, and then spin that next iteration as quickly as possible, has been fantastic for everybody on the panel. And so I appreciate everybody, Todd, Raju, Fred, Kevin, thanks for sharing your time. NAILBA, thank you for hosting. And also everyone watching, thanks for sharing your time. And I hope everyone has a great week.